How's it going today, guys? I hope you're having a fantastic day. And in this video here, we're going to be doing a full in-depth review of the investment account Betterment. I've had a lot of people reaching out to me asking about these robo-advisors, whether or not you should be investing in them or be cautious about them. And I'm going to be giving you guys my full opinion on the investing account Betterment. And if you guys have any other accounts out there that you want me to do a review of, possibly Wealthfront down the road, some other robo-advisors, or different investing mechanisms altogether, drop me a comment down below and I will be sure to include them in a future video. Now, I do have a link down in the description below where you can join Betterment and start an account with them. This is an affiliate link. You do not have to use it, but understand that if you do use it, it does help me out. It helps support my channel here and allows me to make more videos like this. So that link is down in the description below if you wish to use it. But let's go ahead and get into this video now and talk more about Betterment, and hopefully this will help you decide whether or not this investing account is for you. So to explain it very simply, Betterment is an automated investing platform. It is 100% passive. So what's going to happen is when you open an account with Betterment, they're going to basically give you a risk tolerance survey to understand whether you have a large appetite for risk or you're more on the conservative side of things. And they're also going to look at how old you are, what it is you're saving for, and based on that, they're going to figure out your asset allocation or what investments you should be putting your money into, and they're going to figure all of this out for you via an algorithm. Now, traditionally, this is what a financial advisor would do. They would take a look at your financial landscape, and they would figure out a collection of assets that would fit your specific needs. But what these robo-advisors figured out is that they could do a pretty damn good job doing this with robots and doing this with computers, taking that whole human element out of it and passing on a huge savings advantage to the customer at the end. So traditionally, financial advisors are reserved for wealthier people. You have to have a certain amount of money just to sit in the office of a financial advisor and have them be willing to manage your money. Or if this is a fee-only financial advisor, you're going to be shelling out a couple $100 for that consultation. Betterment has made it so anybody can go out there, invest their money, and get some insight onto where they should be putting their money using that algorithm with a $0 account minimum. If you go into a traditional financial advisor's office and tell them you have $100 to invest, they're going to laugh you out of the office. It's just not worth their time to sit down with you. But if you go open an account with Betterment and you're using their robo-advisory service, they'll be able to help you manage that money even though it's not a substantial amount of money because it's all automated with their algorithms and technology. So with Betterment, you have the advantage of getting that expertise and that insight on what you should be doing with your money without shelling out a lot of money for a financial advisor. And the barriers to entry are significantly lower, where you don't have to have tens of thousands of dollars to start investing with a traditional financial advisor. So that is essentially the niche that these robo-advisors are operating in, is they're trying to serve the younger customers or people who don't necessarily have tens of thousands of dollars to invest. Or they're looking to serve people who want to cut down on their fees and they're tired of shelling out high commission costs to their in-person financial advisor. Now, I should also mention I broke this review up into 8 different parts, so if you guys want to skip ahead, I'm going to include a pinned comment down below with the timestamps, so if you want to skip right ahead to a certain section of this review, feel free to do that. That is down as a pinned comment below. So second of all, let's go ahead and talk about what are the investments. What are you investing in when you put your money in a Betterment account? You're going to be investing in ETFs or exchange traded funds. And an ETF very simply tracks a collection or a pool of different assets. So there's ETFs out there that track the S&P 500, the 500 largest companies in the United States. And if you invested in an ETF, it would be a fund that replicated the performance of the S&P 500 as closely as possible. Now, the reason why people invest in ETFs is because most people understand it is almost impossible to beat the market on a consistent basis. So they say, why not just hold the entire market? Invest in the entire stock market rather than trying to pick the winners. And this is a great strategy that works for people that don't want to be actively picking their investments. They just want to put their money to work, earn a rate of return, and not have to worry about their money or picking stocks or changing their money around or reallocating. Now, Betterment is going to be putting you into both stock ETFs and bond ETFs, and I'm going to give you 2 examples of funds that they work with. First of all, there's the US Total Stock Market Exposure, VTI. It is a Vanguard ETF, and Vanguard has some wonderful financial products, and they're known for having a very low expense ratio. And then second of all, for bonds, there is the US Municipal Bond Fund, MUB, and that is an iShares ETF. So they work with these different ETFs out there through different companies, but what they are offering to you is that management service for a low expense ratio. For most people, it's 0.25%, but we're going to get into that later on when we talk about the fee structure of Betterment. Okay, moving on here, number 3, what are the requirements to open a Betterment account? Very simply, you have to be 18 years or older. It is only for US residents. And if you want to open a Betterment digital account, which is their basic account, it is a $0 minimum account balance. And if you're interested in Betterment Premium, that is their higher end account offering where you have unlimited access to a financial advisor. You have to have at least $100,000 invested in the account. So that is for the larger investors who want to have someone they can call up on the phone on a regular basis and talk to about their investments. But for most people, they're going to use Betterment Digital, and there is a $0 minimum account balance to get started with that. Okay, moving on here, number 4, what are the investment plans that Betterment offers? First of all, we have Betterment Digital. That is their traditional service. It's a 0.25% annual fee, and that is a fully automated service where you're not going to be talking to anyone in person. They're going to use their technology and their algorithms to figure out what assets you should be invested in. Now, if you're somebody who wants to have someone you can call up on the phone, you would be interested in Betterment Premium. They have a 0.4% annual fee, and you need to have $100,000 minimum in the account to have Betterment Premium available to you. But with Betterment Premium, you get unlimited access to a team of certified financial planners. And the good thing about that is that these people are a fiduciary, which means they are not earning a commission on the products they are recommending to you. They're going to be giving you unbiased advice because there is no sales commission involved. So if you are interested in that service, you have to have a $100,000 minimum in that account, and you're going to pay that 0.4% annual fee as opposed to the 0.25% with Betterment Digital. Moving on now, what are the pros of investing in Betterment? First of all, diversification. There are 12 different asset classes that they will invest you in based on their ETFs and what they want to put you in based on your goals, your objectives, and your timeline for investing. But there are 12 different asset classes they could potentially put you in, so you can be diversified across many different assets. Second of all, Betterment does offer retirement accounts, so if you want to take advantage of the tax savings of being involved in a retirement account, you can do that right through Betterment with accounts like the traditional IRA, the Roth IRA. They offer SEPs, and they offer some different retirement accounts as well that you might be interested in. The third pro for Betterment is that this is 100% passive investing. You put your money in there and you forget that it's even in there. Maybe you're going to continue to contribute every single month or every single year, and they're going to take that money that you put in, they're going to rebalance your portfolio, and down the road as you get closer to your goal or your objective, they're going to change that blend of assets to suit your needs. But you don't have to do anything. You don't have to do any rebalancing. You don't even have to think about your investments with Betterment because it is 100% passive. But again, that is where some people might say this is a con because they have no involvement in their investments and they want to have a little bit more say in what they are doing with their money. So for some people, that is a pro, and for others, that might be a con, almost too passive, if you will. The fourth pro for investing in Betterment is that they have automated rebalancing as you continue to add money and at set intervals, and they also have automated contributions. So if you want to invest $100 a week, you can set it up so Betterment goes in, deducts that money from your account, moves it to your Betterment account, and then gets you invested. That way you can automate your savings and your investing. And then the fifth pro for investing in Betterment is that they have daily tax loss harvesting. If you're a beginner to investing in the stock market, this is not going to make sense to you. But basically what they're doing is they are selling certain investments at a loss and buying back similar investments. That way they can take advantage of recognizing a capital loss and cut down on your exposure to capital gains. You really don't need to worry about this unless you're an investing junkie, but understand it's going to save you when it comes to the taxes that you are paying on your investments. Okay, moving on now, what are the cons of investing in Betterment? First of all, the main one is the fact that this is just too passive for some people. They want to have more say in what they are investing in. Now, Betterment does have a flexible portfolio option where you can decide what funds you're investing in, but you have to have a minimum of $100,000 in your account to have that option available to you. And for most people, that is just out of reach. Most people don't have $100,000 to be investing. And so if you are looking to have more say in what you're investing in, you're going to want to be exploring different options. And if you want to pick individual stocks, you are not going to be able to do that with your Betterment account. The second con is that there are no REITs, real estate investment trusts, or commodities. Now, in the modeling that Betterment has done, they have said that these asset classes do not add value to your account, but some people like to have exposure to REITs and commodities. You do not have that option with Betterment. You are only investing in stock ETFs and bond ETFs. And then the third con, the only other con I have here for Betterment, is the fact that you are 100% invested, so there's no cash held within that account. So if you are looking to have a separate savings account or an emergency fund, that is going to have to stay outside of your Betterment account. Any money you put into that is going to be fully invested, 100% invested at all times. But the good thing is, if you want to redeem at any point in time, there are no penalties. You can take your money out at any time, and you should have no problems with redemption because these are publicly traded ETFs on a major exchange, so there's always going to be a buyer on the other end when you're looking to sell. So moving on, who would I recommend Betterment to? First of all, I would say long-term investors. Betterment is a long-term investment. This is not something where you're saying, oh, I'm going to be buying a car in 6 months. I don't want to leave my money in my checking account. I'll put it in Betterment. That is not what you want to do. If you're investing this money, you should be ready to put it in there for 5 or more years because this is a long-term approach to investing. Betterment is for passive investors. This is for people who do not want to worry about rebalancing their portfolio or asset allocations in the first place or tax loss harvesting, things like that. They want someone to do it all for them. Maybe they can't afford a financial advisor or they don't want to pay those fees, so they're going to take advantage of having a robo-advisor instead. Betterment is great for beginner investors, it's great for intermediate investors, and it's great for people at any age group. You could be 18 years old or you could be 65 years old, and because when you open an account, you tell them what your goals are, you tell them what you're saving for, you tell them how old you are, they're going to give you an asset collection based on your age group and your goals. So a young person is going to have a more aggressive portfolio, and an older person is going to have a more conservative portfolio. So any age group, Betterment is a suitable choice. And then finally, who is Betterment not for? It is not for short-term investors. It is not for traders. It's not for people who want to hold individual stocks. You cannot do that within your Betterment account. So how I say this is it's not for the DIY investor or the active investor. If you want to be active in your selection of funds or you want to buy individual stocks, Betterment is not the account for you. But I do want to run one idea by you. It's something that might be interesting. What I know some people do is they have their Betterment account as the core of their investments. That's going to be their more conservative long-term investments. And then they have a slush account where they have an individual brokerage account where they're buying the individual stocks and they're being more active with their investments. So some people are taking higher risk investments by picking individual stocks. They're taking some of the profits and moving it over to a more conservative long-term investing approach. And so that again is a great strategy that you might want to follow. But anyways, guys, that's going to wrap up this video. Thank you so much for watching. Again, like I said, if you are interested in signing up for Betterment, there is a link down in the description below. This is an affiliate link and you do not have to use it, but it certainly does help me out and help to support my channel. But thank you guys so much for watching. I will see you in the next video and I hope you have a great rest of your day. If you are interested in learning more about investing in the stock market, I've created a free course just for you. The link is in the description below. Here are a few other videos you might enjoy as well.